Hello, we're back again for another Romeo CRT 2023 trade review. This is going to be the third trade that I've reviewed for this video series. He has a GBPUSD, so the Forex pair with the pound. He went short on February 20th, and this is a really fun trade to break down. His before and after pictures here on my PowerPoint slide show a bullish turtle soup forming below the early February lows, and he's expecting it to reach up into the daily fair value gap that was formed in mid-February, a bearish fair value gap that he's got outlined by that gray rectangle. And then once price heads up into that daily fair value gap, he's expecting a retracement down into the draw on liquidity, which he has marked with the classic eye emoji, right around that 1183 level. So he wants to get bearish on the pound after the retest of that daily FVG. So it's essentially a smaller bullish turtle soup feeding into a larger bearish continuation turtle soup. What's really special about this before and after, which makes me really excited to review these, is he actually has something that I think is kind of a little nuanced thing that he's just recently released, which is a make or break level. So if you look at the red line on the chart, the red line at 121.89, that is essentially his break even, because that was his original bullish entry for this trade, it looks like, and that break even is essentially an invalidation point. And recently on Telegram, within the last 2 months or so, he has dubbed a level like this a make or break level. Other algorithmic trading systems would call it an invalidation point. But basically, if you see price, let's say it makes a convincing daily close above that level, or if you trade up into that level and then you start to get bullish turtle soup entries, then you're probably going to want to treat the lows of the lows that we see in the before picture. So in other words, these kind of mid to late February lows occurring at around 119, 1.19 in the on the price there. You want to treat those lows as that's as far as the bearish CRT went. So without further ado, we're going to get into FX replay and we're going to analyze. Where obviously it's a success, right? But how could you scalp it? What are some of the more interesting dynamics between this? And this will be just a short little 10-minute analysis of that. So I'm just going to pop into FX replay. So with FX replay, it gives you the ability to go to lower time frames, which I always appreciate on historical price data. So it's really nice. But this daily fair value gap, this bearish day fair value gap, he's got it marked out. The other thing to look at is what we're trading right now is we're actually trading a monthly CRT. So back in 2023, he had kept CRT fairly, I don't want to say secret, but he hadn't really revealed it to his public followers or his kind of surface level trading groups. He might have already revealed CRT to the more advanced groups at that time, but yeah. So what we're looking at right now is we actually want to look at this candle here, the January candle. Now, why would a January candle be a great monthly candle to look out for a monthly CRT opportunity? Well, the reason why would be that January is actually the opening month of the year. And if you just follow kind of the trajectory of the pound from, the pound in 2021 came under a lot of pressure versus the dollar. Michael Howell was talking about the October of 2022 being the absolute bottom of the global liquidity, And so that affects the relationship between the dollar and the foreign FX quite dramatically. After October of 2022, there was a lot of intervention. The British actually had a sovereign debt crisis with their gilts. So the British gilts are the same thing as the US Treasury bonds. And the British pension system in general was having a rough time. So when the British government intervened, this created a dramatic low as the pound essentially tried to trade down to parity with the dollar. So what we have here is on the monthly chart, we have a bullish order block. And so you actually kind of had like a monthly, a large reversal on the monthly chart with an order block followed by a bullish FVG. And after that bullish FVG printed, the very next month was December, so obviously you've got liquidity receding due to the holiday trading conditions. Then you have January. So you could almost consider both December and January monthly candles as accumulation. And what we need to do with this trade is we're looking out for manipulation below the January low, and below the January low is where we're actually looking to get long again. And so that's what Romeo is doing as he calls out this trade. Is there's an original CRT turtle soup on the daily time frame. So this daily candle gets turtle souped, and this daily candle is actually the high. Sorry, not the absolute high of January, but it kind of like allows the monthly CRT to form properly. You can think of it as a if this is the high on the daily chart from December, and then this candle here is the candle that breaks the high. If we close decisively below that candle, and then come up and retest it, that is a daily model number 1 entry, kind of under the newer conception of looking at model. Is it back again? Is it fixed again?
Yes.
Thank you. You're a big help. Thank you. You just saved my video. Okay. So anyways, what we're looking for here is this is a bullish CRT of this particular daily candle. And as price goes above the highs of this daily candle, then we're actually looking for this to become an order block. So this is going to become an order block. There's going to be another daily CRT of probably a doji candle that's going to form, and we're going to probably have 1 or 2 retests of this level before we finally dump into the draw on liquidity. So I'm actually going to go down to the hourly chart now, because now that we're familiar with how the chart looks on the daily time frame, this is the daily order block right here, this rectangle. We're looking for this level to be breached, and then perhaps another stab, like another retest of the bottom of this order block, before finally dumping out into those lows. So I'm just going to replay that really quick. And once we get to the, once we get through this price action, what I'll do is I'll break down the lower time frame entries for you guys. So there's the first time it price retests those daily order block there, and see we've cleared that headless hourly candle. So now you can kind of consider this like efficient price delivery. So this is really the culmination of our bullish turtle soup. And then finally we retest. We do an inducement low. And then we're actually going to head all the way back up again and retest just the bottom of this. This becomes another hourly, a 1 hour order block. So we basically retest the body of this candle here, but we never close above it. Then price reacts really strongly off of it. And then right in early March, we dump down into the draw on liquidity. After we dump down into this draw of liquidity, what you really want to look for is actually a bullish entry. So we're looking for like a bullish entry below this gray level at some point in mid-March. And what that's going to do is that's going to essentially set up the second quarter. March is the last month of the first quarter. So to have March be like a retest point and then have, that sets up April, which is the first month of the new quarter, to either make lower lows relative to March's lows or make an SMT and make higher lows. But we get really, really, really good reaction off of that. So I'm guessing, and I haven't really looked at the price action, but I'm guessing that we actually got the higher lows after that. But because Romeo uses kind of like a turtle soup approach, and because he recognized that we're actually in a monthly candle CRT where this is month number 1, month number 2, and then month number 3, also forming an SMT with the euro, which is a correlated pair with the pound. Then he could be pretty sure that we actually do have bearish draw on liquidity there to that level until it's taken out, at which point you have a really good monthly bullish FEG reversal zone to then go and take longs again, which that first long off of that FEG was amazing. And some of his other trades are actually in mid-March and in early April, and they're kind of like these quarterly swing trades, trading the euro off of parity higher in 2023 and trading the pound back into the upper 20s. All right, well, that's my trade review. I don't think there's too much more to look at from the bearish perspective, kind of heading down. I mean, you could look at it on the 4-hour level as well, but the thing about the pound is it's so choppy that as a scalper, you really would have a lot of different bearish trade entries. Just looking at the way that the order block, breaker, retest the breaker, dump, order block, retest the order block, dump, another order block, retest that lower one, dump into the draw on liquidity. That's the kiss of death. So you really had, like, when Romeo outlined his trade from here in on Valentine's Day in mid-February, the retest of that daily bearish FVG, you had a breaker entry. Then you had a order block entry. Then you had another order block entry to be kiss of death into that level. So the kiss of death was finally on in the second week of March there, Tuesday, March 7th. So a really fruitful trade that you saw with 3 different entries. Really awesome. So it just goes to show that if you successfully identify a monthly CRT, you've got 3 entries off the rip probably, and 3 more entries on the discount side of price as well if it's bearish, as before the target gets hit. Keep in mind, I mean, you have this invalidation level on your chart the entire time, that high. He had that colored in red. So in other words, if price were to close decisively above that there, that's essentially his break even, and so he's out at that point after having probably picked up a bunch of profit on this leg and a bunch more profit on this leg. So he's getting out at final target, hopefully with the full profit. Alrighty, so that's it for today.